Welcome back, investors. Ticker Time News. I'm Adam. In Take-Two, ticker symbol TTWO, and Zynga, ticker symbol ZNGA, are making a big splash in the M&A market as the two companies announce plans to merge in an effort to create a leading mobile game developer. Zynga, which has seen its stock price cut in half over the past year, is surging on the $9.68 a share cash and stock buyout offer from Take-Two, representing a whopping 64% premium on the closing price from last Friday. The maker of mobile games such as Farmville and Words with Friends has struggled mightily from an execution and financial performance perspective, evidenced by its 8 straight quarterly EPS misses. Therefore, the generous acquisition offer valuing Zynga at roughly $12.7 billion is a very welcome development for the company's investor base. With stocks selling off one day and gaining the next, wouldn't it be great to know what the top 10 stocks are in categories like value, growth, dividend, and momentum? Well, great news. We just uploaded our top 10 stocks list for each of those 4 categories. That's over 40 high quality stocks ready to choose from that are constantly updated, so you always have the best names available. Click the first link in the description and become a member to get instant access to our top 10 value, growth, dividend, and momentum stocks, and so much more. We've done the research so you don't have to. On the flip side, though, there is a healthy amount of skepticism regarding the merits of the deal from Take-Two's perspective. Its stock sank sharply lower today. It dropped 13.1%. Considering the steep buyout premium, Zynga's dismal quarterly earnings track record, and the fact that Take-Two plans to take on additional debt to finance the transaction, the negative reaction is certainly understandable. However, the merger does offer a few key advantages from a strategic point of view, including these. With increased mobility, gamers are allocating more playing time to mobile devices rather than to at home gaming consoles. By combining with Zynga, Take-Two will turbocharge its mobile gaming portfolio. The company estimates that mobile will represent over 50% of net bookings in fiscal year 23, compared with only 12% in fiscal year 22. This deal can also be viewed as an answer to Electronic Arts, or EA, in the $2.4 billion acquisition of Glue Mobile last year, securing a more diverse and mobile leaning game lineup that's less resilient on core titles like Grand Theft Auto, NBA 2K, should put Take-Two in a better competitive position. Like Zynga, Take-Two's quarterly results have been erratic and unpredictable. Revenue growth has ranged from a loss of 29% to a gain of 125% over the past 6 quarters. One faucet working in Zynga's favor is that, unlike its EPS performance, its top line results have been solid and steady. In fact, the company has not missed quarterly revenue estimates in the last 5 years. This consistency is related to Zynga's high level of recurring consumer spending, RCS, and I love recurring revenue, which will lessen volatility across quarters for Take-Two. Although the premium over last Friday's closing price is significant, and boy oh boy is it, the total transaction amount values Zynga at about 4 times next year's revenue. When considering that Zynga is expected to add $100 million in annual cost synergies within the first 2 years of closing, and at least $500 million in annual net bookings opportunities over that same time, the purchase price begins to look a little more reasonable. With Zynga shares trading well below the $9.68 a share acquisition price, it's clear that there's some doubt about whether this deal will receive investors' blessings. The proposed deal isn't benefiting from a timing standpoint either. Just look at the environment we're in with rising interest rates hanging over growth stocks. While I can see the strategic rationale for the merger, paying a lofty premium for a high risk asset like Zynga in this current environment is a tough sell. Well, that's what I think about Take Two and Zynga right now. What do you think about Take Two's acquisition of Zynga and the premium that Take Two is paying for Zynga? And remember, your comments make these videos so much better. Thank you so very much for watching, and I will see you in the next video.